Hello, everyone. Thank you for making time for this workshop on access to finance. This workshop is organized by the AMEA Access to Finance Working Group, which is co-led by Maurice Blom, COO of Scope Insight, and Josephine Eklu, who is Inclusive Business Manager at Ricolto. So with that, I would like to pass the word to Josephine, who will be leading the session today. Josephine, the floor is yours.
Thank you. Thank you, Felipe, and thank you for the introduction. I'm glad to have everyone here on this call. During this workshop, we'll be discussing something that is very critical to agriculture. Before I start, I would like to say good morning, good afternoon, good evening, wherever you are. This is an age-old problem that most of us know, especially in the development space, has plagued us. And this 2-hour workshop is not to solve all the problems, but to start thinking around how we can solve it. And hopefully after this session, it can lead to fruitful collaborations that we can develop innovative solutions to overcome this problem. And as you all know from the title of the presentation, Access to Finance, let me just start by setting the pace a bit. The World Bank estimates that there's going to be a 70% demand in food by 2050. And to meet this demand, we need about 18 billion US dollars annually to be able to cover up or invest in this kind of demand that is needed by the population. And this investment mainly has to come from private sector. However, we know that especially those of us in developing countries, we know the issues that we face with access to finance. Mainly, some of them are the inadequate or ineffective policies from sometimes our central banks that do not enable agricultural financing or financial inclusion. We talk about elements of high transaction costs in reaching mainly the rural population. We also talk about instruments that are not developed to meet the demands of this kind of population. So for the Access to Finance Working Group of AMEA, our aim is to see how we can bridge this financing gap. And therefore, you would want to use this workshop to really set some outcomes to, for example, draw up or design roadmaps of innovative financing that can really be tailored towards the needs of the farmer organizations that we work with or the agri-SMEs that we work with. We also want to look at some of the policy bottlenecks in our various countries when it comes to financing agriculture and look at how we can work with central banks. For example, Aseli has given a good paper on that, on how we could work with central banks on some of the policies that do not enable agricultural financing. And so with that in mind, I would like to say welcome to everyone. And we would like to start this session by sharing some of the experiences that some of our members have, the likes of Agra, Scope Insight will be giving you a wonderful presentation on some of the projects that have been carried on. And then, of course, yeah, feel free to raise issues that we could work on, improve on, so that you can have a fruitful deliberation. After this deliberation, we don't intend to stop there, but reach out to individuals who would like to carry out innovative financing models with us to be able to achieve our aim. Most of us here are development practitioners. Some, we hope, most of the financial institutions that we invited are on the call so that we can develop good models that can overcome these challenges. So thank you, everyone. We'll be glad if you interact with us. During the session, the next session is mainly presentation, after which we would have our breakouts as usual to dive deeply into the issues and come up with solutions as well. Thank you. Over
Thank you,
to you,
Josephine.
Felipe. Yeah.
Thank you, Josephine. Yes, so the first presentation is from Agra, and I will ask Head of Inclusive Finance in Agra to take the mic now and present. Thank you.
Thanks, Felipe, and welcome everybody. I see we have a great mix of people that are providing technical assistance and people that provide finance, financiers. So yeah, it's great that we are all together. So thanks for joining. I want to take you through what we have been trying to do in the past 4 years in a very cumbersome, slow moving program. But I think we are step by step getting there. And I think I would like to share with you what we are trying to build to also get your feedback and further ideas on how we can build this further. This was what we had in mind 4 years ago. In Agra, we want more SMEs to get access to finance. And for that, we need to reduce the risk and cost, right? Because it's very expensive and it's very risky to finance SMEs. I don't need to tell you. Now, we were facing two problems: the lack of a market for business development services and the lack of a market for agricultural finance. Both markets are highly distorted. And people are not speaking the same language, right? And SME thinks that they need finance and they are very financeable, and banks see it the opposite way. So there was a problem of using the same language. So in order to bring everybody together, we would like to see this working as pictured in the slides. Right, you have BDS providers on the left that are approved, certified assessors of scope insights, which we have found to be that harmonized language between financiers and business development providers. At least we saw it as an opportunity to use scope as that common language. Let me put it that way. So we thought if we use scope to tell how bankable or how good companies are performing, that would be fantastic. Scope was mainly used by NGOs to measure their performance on projects. So we thought, why not try and get BDS providers, local BDS providers, to adopt scope, to become a scope assessor, and to offer that as a product in the market to SMEs, so that SMEs would have a report, a score, and rating, whatever you want to call it, that the banks would understand, and which would reduce the cost for banks in their loan origination process. Because then they wouldn't need to dig into all the information that scope is already collecting. So that was the idea, right? So scope in the middle as a common language between business development services providers and financiers on the right. So this was and is what we have in mind to do. Right, and I mean, on the lending side, of course, you see the maybe we can go back. You see there's different roles and functions in the lender side. There's the matchmaking, the HRF deal room, which will be on from next week. Well, it's on already, but we will be there physically next week. There is the local financial institutions. I saw Advance already on the call. There is ABC Funds, so Len was on the call. ACF, I saw them on the call. ACF is a mix between de-risking and funding. And then there's SLE, I saw Richard also on the call. So yeah, I think all these people active in the financial sector have an interest to understand where the pipeline of agribusiness comes from, and that it is one common type of language. So what we set out to do in the next slide is two things. So first was to get these local experts that you saw on the left-hand side, to identify them and to turn them into scope certified assessors, and to help them to see the business case of being a scope assessor, right? Because now mostly scope assessments are being done in the context of projects. So we wanted to prove that being a scope certified assessor is a business and you can make good money out of that. So we identified local experts in 5 countries. We onboarded them, we trained them, well, Scope did that. Then we gave them some testing material to see how it was working. to develop BDS packages based on the outcome of the assessment, which could then be leading to a reassessment to see how well they have done and how useful it was to use the scope to tailor the BDS services. And now I come to a term which we have not yet done, but to translate those assessments, because initially we thought these assessments could be used by the banks to see whether an SME would be bankable or not. But we realized that these reports were 50 pages and that maybe not all information in the reports was useful for the banks and needed by the banks. So that's why we came to project number 2, which was developing the bankability metrics. So to summarize what informs the bankability of an SME. Right, so to agree with many financial institutions using databases of the CSAF members, of Scope Insight, and of other lenders here in the region, to see what are the metrics and the indicators and information you need to assess whether somebody is eligible or not for a loan. So it's like a pre-due diligence. So is this SME or cooperative bankable and eligible for our fund? So we developed together with the Center for Financial Inclusion and Scope Insight, we developed a standard set of metrics, which is quite a short list of information, which should really help banks to communicate to SMEs what they require in terms of information, and for SMEs and the business development service providers to understand what it is they need to work towards to. Because now there's a lot of back and forward with information. Oh, you're missing this form. Oh, we don't have this data point. So it's really to help speed up that process and reduce the cost. Now, what these two programs have in common is that now we have the scope assessments to translate them into bankability metrics, right? So that is now where we are. And so how can a scope assessment, which is done by a BDS provider, you saw the names, Pearl in Nigeria, Sundi in Tanzania. I think Scope has now 10 local expert networks. AGRA supported 4 of them. And with some materials, you see here the data of what we have been doing. So they have been doing some testing, assessments, reassessments, some BDS packages. Not everything went smooth, but I think the principle, the idea of what we wanted to do has been achieved, right? The scope assessments improved the targeting of the business development services. So the BDS providers were really happy by using the scope assessments. The local experts, so the ones we have onboarded, let's say, are really wanting to continue using the scope assessments and see that the banks have an appetite and an interest in this, right? They really see that it can reduce the loan origination cost and process because it is very useful data and very useful information. And so the banks see the advantage of using it. There's also a willingness to pay for solid pipeline, right? But it's banks are slow, so we have not yet identified a bank that is already into the system and really using this as their way of assessing SMEs. But I think from the engagement with the financial institutions that we have had, I think we will soon have some that are onboarding. Sterling Bank has signed in Nigeria an agreement with Pearl to start putting this into practice. So I think we will need to do some other rounds with the banks so that they become familiar and see the value of using this whole system. I think we've also found that the cost of the assessments can be covered either by the SME or by the financial institution or a cost sharing. So I think that in the end, if the scale is large enough, the cost of each assessment will go down with enough to make it affordable and to make it a real good competitive value proposition for banks to decrease their loan origination costs. So we have come quite a way. It was not easy. You see, some of the experts dropped off, etc. So what is next? So what do we still need to do? So we have the scope assessors, which are private sector. You can just call them and say, I want to have an assessment done, and you can pay them, and that's done. So that bit of the equation is available. We have banks that are familiar with the system, that have heard of the tools, that know what bankability metrics are. So yeah, I think we now need to get the system going, right? So that SMEs ask for an assessment if they want to get access to finance from the banks that already understand the system, and to see and try and test that more. Now, the other part of the equation, so that's the scaling, right? Through our partner financial institutions and our partner BDS providers. And that includes all the 10 that are working with Scope Insights. Now, in order to make it even more easy is to automate this, right? So to use the information that is sitting in the Scope databases to translate the assessment information automatically into bankability metrics. So that is one step. And then to have this portal building an API and linkage with the credit rating or rating systems that the banks are using in their loan origination systems. So that is, I think, the last bit, because then you will have a full-fledged system where the assessment, which is done by the SME, is immediately understood by the bank because the information is entered into their systems. So there is a rating in whatever way the banks would like to use the rating that informs the bankability of the SME. And if that is all working, I think we have come a long way to reduce the cost and the time it takes to make banks and SMEs work together. Of course, the banks will need to do their own assessments of the bankability of the project that is going to be financed, right? So this work is all concentrated on the bankability, the performance of the cooperatives and the SMEs that are looking for finance. Let me stop here. I think many of the terminologies is familiar to you. So I hope I've not been talking in mysteries. And I want to hand it over to Aseli.
Thank you,
to
Hedrick.
Felipe.
Yes, no, thank you, Hedrick. Yes, next up we have Richard Minikito from Aseli Africa. Richard, please feel free to unmute and start your presentation.
Sure. Thank you, Felipe, and it's a pleasure to be on this call today and attend this workshop. So Aseli is familiar with many of you. I'll just try and do a very quick overview on what we're trying to achieve for those that may not be familiar with the initiative. So we call ourselves a market incentive facility, and our overall mandate is to bridge the gap between supply and demand for capital by agricultural SMEs. But we are going above, beyond this to also strengthen the enabling environment. Reference has been made to some of the work that we're doing just to understand the policy constraints that are inhibiting the flow of capital towards agricultural SMEs. And ultimately, what we hope to achieve is to deepen the level of impact that these SMEs have, both from a socioeconomic standpoint as well as from a climate and environment standpoint. We are currently implementing the initiative in East Africa, so that's Kenya, Uganda, Rwanda, and Tanzania, but are also looking to the future and trying to explore which other markets a similar model can be deployed to. So that is work in progress. Next slide, please. So I don't think I need to go into too much detail onto why agri-SMEs are important. We all know they play a vital role in the value chain, that the nexus between the farm and the market, And our rationale as a cell is that if capital is directed towards these SMEs, if their capacity is enhanced, then become more productive, then they will subsequently, direct more income towards smallholder farmers, but also be able to serve the market's needs. Next slide, please. So we conducted an extensive research covering over 30,000 loans across East Africa, just to understand the bottlenecks that are preventing lenders from lending to agri-SMEs. So in summary, we discovered or highlighted two key constraints. Number one is that lending to agri-SMEs, the risk in agri-SME lending is twice as high compared to other sectors, and that the returns are 4 to 5% lower compared to lending to SMEs in other sectors. Next slide, please. So the current situation is that the economics of agri-SME lending are unfavorable towards lenders, and a lot of them are not making money, especially for ticket sizes within a certain threshold. So using our incentives, what we're trying to do is shift the economics of the loan in favor of the lender, so that using our incentives, then the lender is able to get additional revenue for any loans to agri-SMEs. And this is what we hope to achieve within the first few years of our SELI, to demonstrate that with our incentives, loans to these businesses can be profitable. And over time, as the competitiveness of the SME and the lending market improves, then the economics of the loan continue remaining favorable, but then the need for incentives reduces. And our exit strategy as a SELI is that we are currently a blended finance facility with funding coming from donors. But we hope to demonstrate to governments across East Africa and other parts of the world that investing in agri-SME lending can deliver the impact that is desired. And hopefully they will take over the subsidization of loans towards the sector. But ultimately, the businesses will become more competitive, the lenders will have a better understanding of the risks that their businesses are facing, and hopefully come up with products and improve the appraisal process of loans to these businesses. And over time, it will be clear that lending to the sector is profitable. Next slide, please. So this is a snapshot of some of the loans that we have supported to date, just highlighting the profile of the SME. And in this context, farm organizations are also considered SMEs. So for example, I'll take the Uganda Coffee Cooperative one as an example. The loan amount was $200,000. And the lender earned a first loss cover of $10,000 and an origination incentive of $10,000. Maybe just to elaborate on this a bit further, the incentives that we offer come in two forms. The first one is a first loss cover that is provided at a portfolio level. So for each loan that the lender registers with us, they earn a certain cover as a percentage of the loan. But over and above that, depending on the profile of the loan, they also earn what we call an origination incentive. So this is a direct payment that is made to the lender for the loan that is registered with us. So for the loan of $200,000, the lender earned an incentive of $10,000. But they have also earned a first loss cover of $10,000 that goes towards their portfolio. So if any loan in that portfolio goes into default, then they can draw down based on the amount of first loss cover that they have accrued over time. Next slide, please. So since we launched the incentive program in September of 2020, we have registered loans worth $64 million. This is as at 31st of July. This represents 497 loans with an average loan size of $128,000. So in terms of country, we can see the country with the largest value of loans is Rwanda. But interestingly, it is also the country with the lowest number of registered loans. So meaning Rwanda is registering higher value loans compared to other countries. In terms of number of loans registered, Uganda is leading, then followed by Tanzania and Kenya, and then Rwanda. You can see that in terms of the type of organization, about 11% of the loans have been registered by cooperatives. But we're seeing that cooperatives are registering the highest average loan size, averaging at about 200,000. And these cooperatives are predominantly in coffee and other high value chains such as barley and cotton, but we also have some cooperatives in maize. So we can see that these large cooperatives that are receiving loans from the lenders accredited by ASELI, and this is demonstrated by the average revenue of 900,000, and 17% of the loans by value to cooperatives are to new borrowers. So what this simply means is that the lenders are preferring to work with large cooperatives that are known to them. So there's still a bit of an aversion to working with new cooperatives. But then also importantly is that there's still a preference for larger cooperatives. So despite the fact that ASELI is offering these incentives that is direct money to the lender and also addressing the risk that is inherent to loaning to cooperatives, there's still significant scope to increase the pipeline of cooperatives that our lenders are lending to. Next slide, please. So in terms of way forward, I think, as I mentioned, the significant scope to increase the number of farm organizations that are accessing financing. So as ASELI, through our model, our incentive model, we are trying to work with the lenders to sort of shift the risk appetite or attitude towards these different sets of agri-SMEs. But we all know and understand and appreciate the role that cooperatives play in terms of the number of smallholder farmers that they that they source produce from or that are part of the cooperatives. But then still there's not enough capital that is going to this group of SMEs. So I think it's important, number one, to establish the level of demand for capital across different segments of cooperatives. Given that ASELI's model looks at SMEs with minimum annual revenues of $50,000, yet the average revenue for cooperatives is $900,000. So there's a significant gap. And what we're asking ourselves is, do these cooperatives exist that are within the $50,000 to $900,000 threshold? And if so, why aren't the lenders lending to these set of businesses? And there's the Uganda Cooperatives Database, which is a good first step, but I think there needs to be more concerted effort towards just understanding the different segments of cooperatives that exist and what the level of demand for capital is. Some of the key constraints that have been highlighted by lenders focus on management capacity and financial records. I think this is not new to the people on this call, but then it's still increasingly an issue that is raised by lenders. So how can we leverage and structure TA to address these constraints? For example, AGRA is running an innovation challenge in collaboration with ASELI that is looking to support SMEs to put together financial records and eventually link them to lenders. So I think this is something that we need to increasingly focus on as ecosystem actors, and also deploy innovative approaches to TA. How can we generate demand for TA by farm organizations, but also drive engagement in order to increase or expand the outcomes from these TA interventions. And lastly is platforms to actively put these efforts in front of capital providers. We have the Deal Room by Agra and other various platforms that exist. But I think also what is critical is the feedback loop for continuous improvement, so that the FOs and other SMEs are able to understand, number one, why is it that they were not successful in their quest to access finance, and what can they do, what concrete actions can they take in order to improve their chances in future. So that is it from my end, and back to you, Felipe.
Thank you very much, Richard. Thank you for sharing the lessons from South Africa so far. And with that, we've had now 2 presentations that share the lessons from current projects and activities from our members and partners. And with that, I think it's also a good bridge now to have 2 more presentations on how current thinking and experience has influenced the design of new approaches. So with that, I would like to ask Maurice to take up the mic and explain a little bit more about the approach in depth.
Great, thank you so much, Felipe. And it's so great to hear Hedwig and Richard's story, because there are so many things that link up. So I think we're in some places repeating ourselves, but I think it's good to start to connect the dots. The project that I would like to highlight here is a project that we have done in Uganda, a systemic approach to economic growth. The goal is to develop a sustainable and systemic change to create that for the market in Uganda, and to use data doing that. So it was our goal to become the showcase project for ecosystems approach, and use data to make better informed decisions. In one way to segment organizations, the farm organizations, another way to analyze the needs that they have, and also to graduate them. We want it to be a sustainable solution. So we tested some innovative business models, one business model, and of course, with every program and project, we have a lot of learnings. And those learnings we need to share. And that's, well, for example, here in this setting with AMEA members, we've done that before. So some of you might already recognize this project. But I'm very excited to share this now also with the many financial institutions and the financial service providers on this call, because that's where I think sometimes we still operate in silos. So yeah, as you saw in the previous slide, it was in Uganda, and this is one of the AMEA TIF projects. So I think that is also important to realize. One of the main things, as I already mentioned, is data-driven. So within this project, we developed the Scope Rapid and the cooperative database, the national database that was launched, I think, about a month ago by the Ministry of Trade, Industry and Cooperatives. The goal of this is to really segment, to see where these organizations are, so that we have the appropriate follow-up after that. Because there already we believe we can save a lot of money doing that. This national database is not yet finished. It still needs a lot of development. But it's a very, very good first step where we can learn from. Next slide, please. The graduation process. I think this is the most important part of each and every program, and where we also have the most to learn from. The first step after that first segmentation is to do an in-depth assessment. So yeah, we have different tools for that, the basic, the pro, and the input retailer, and soon also a SACO tool. But we really need to understand the in-depth needs of all these organizations. So then the next step is, after that assessment, that leads in that step 2 to insights. And these data insights need to be used to develop tailored BDS plans or TA plans. And one of the lessons, I think, is that maybe that can be done in a better way. We don't sometimes see that all our clients and partners use that to, with the best goal in mind, so that they still do TA a little bit in the old way that they used to do, but see how we can make it more tailored. But one of the questions also is, what do we tailor it to? What is the goal? What does that organization want to achieve? So that really using that data in the right way is, I think, is something that we can take to a higher level. Step 3, that is where the targeted BDS really needs to lead to more mature agribusinesses. And this, for the financial service providers on this call, that should reduce the risk. So improve the quality of the pipeline. And this is where that TA is so important. And then this is also where I think Richard said that we need to leverage and have a structured TA to make that happen. The reassessments, Hedwig mentioned this already, need to show that track record and give an indication of bankability. Still, one of the things can we have one back, please? Yeah, thank you, Philippe. The bankability is, I think, an important one to highlight. That do we know what the definition is of bankability? We have the bankability metrics, so we know what fields we need to put in there, but it would help also for the financial institutions to communicate with us, the development sector, on what they consider as being bankable, and that can, of course, differ. Next. Yeah, the sustainable solution, I already mentioned that. We believe that the end game will be that for each and every level, there will have its own business model. So at the top end of the markets, agribusinesses, farm organizations, cooperatives need to be able to pay for their own graduation process. Financial sector might invest in there to strengthen their value chains. And the financial institutions who finance that level, they should also pay for that quality pipeline that they will receive. Going lower in that pyramid, there will be a hybrid market business model. This is maybe where risk sharing facilities, those kind of things can come in. The incentivization that Sally does, this is where we need to help that market. And then at the bottom of the pyramid, the base of the pyramid, that's where we see, that's where we call it the donor-driven model. That's probably where donor money will still be necessary. The tiered business model has been in that MTIC project in Uganda, has been tried. Can you click one more time? Has been piloted by the Colto. So if more information is needed there, please contact Colto. I think word is on the call here. Yeah, so what do we want to do with this project? Well, there have been something like 60 assessments have been done already. So that data is collected, that cost has been made already. So we want to use that data and to map that data into those bankability metrics. On the other hand, we encourage the financial institutions, the MFIs, to articulate what their requirements are. That's something that we need to know, because then we can see if and how we can match them. And then to do this at scale, this is where the portal comes in and where we can do that automatically. Hedwig also already mentioned that one. So these are, this is one of the expectations that we want to follow up after the MTIC project.
Thank you very much, Maurice. Now I would like to ask Marceline also to unmute herself and explain a bit more about RK FinFund in Kenya.
Thank you, Felipe. Hello, everyone who is on this call, and thank you for finding time to join us in this discussion. I'm going to do a brief presentation on a project concept that we are developing in Kenya in partnership with the government of Kenya and other organizations, and funded by IFAD. The project RK Rural Kenya Financial Inclusive Facility for us as Coded is building on our experience in the other projects that we did, particularly the STARS. And on the screen actually are results that we achieved through the STARS model, the model that was linking the supply side to the demand side through BDS service provision, loan product development, and technology. So if you look at our results, we've been able, in terms of access to finance, data project enabled quite a number of farm organizations, 146,000 thereabouts. 20 loan products were developed, new ones. About 12 million USD disbursed. In terms of the value chain development, about 40,000 farmers recruited into 8 value chains. 118 farm producer organizations were strengthened, and we also embedded an ongoing learning and monitoring approach, and in which case we're able to use the studies that we did as internal for internal learning events, but also in other forums. So we are building on this experience to be able to build the program in Kenya. And what is on the screen is the design. This is basically the program as envisioned by IFAD. So we are linking to this, and our role will basically fall on column A, technical support services, and in technical assistance to supply chain, supply side, and then technical assistance to the demand side. Next slide, please. So what do we want to do? We are approaching it from two perspectives, that is looking at the supply side and also the demand side. And for supply side, we are looking at the microfinance institutions or financial institutions in general. And our intervention is to be able to strengthen their capacities through different ways. We are proposing to strengthen capacity of middle-sized. We are not focusing on very high-level financial institutions, but middle to lower, to be able to advance or develop affordable and relevant loan products to the missing middle in the whole loan value chain. So one of the things we propose to do is to do a capacity assessment using the microscore, which is a tool that Coded has used before, basically ECO now Coded, and then to strengthen the capacities to increase agricultural outreach through loan product development, when we're looking at loans around inputs, loans around assets. And in this, we'll be applying our ACAT tool, which has also been very, very instrumental in the success that I shared earlier on. The other, that is actually a rundown of what ACAT is about, where we identify at least 1 or 2 pilot branches that we want to work with for the financial institutions. We work with them, develop the loan products. In terms of what we've developed, we institutionalize this within their systems. Part of this is also to work with the MFI to appreciate the diversity of their clientele, and particularly to enhance the access of women for loans. We do a lot of gender awareness. And then there's the digital ACAT comes where we partner with a technology company called Simbuka that helps with loan. It's a digital platform that helps with loan origination. And that has been very, very instrumental, particularly in Rwanda and areas where we implemented the STARS project, to be able to support the financial institutions in developing loan products and also the disbursement on loans with a schedule of the value chain. So again, we will be doing training. Several modules. Our ACAT has several modules, both addressing capacities for the MFIs and also capacities for the farm organizations. And inbuilt in that is also the quantitative monitoring, so that we are able to already foresee where we would have challenges, and together we work towards addressing those challenges before we get into problems. Intervention 2 on the demand side is the usual BDS. I think this one we talk about a lot more. And in this perspective, one of the things I think, in addition to everything else that we know is happening in BDS, we want to make deliberate effort as a program or as an organization to really provide opportunity for scaling up the relevant tools that are available in the AMEA toolbox as our contribution to upscaling and improving the status of the farm organizations, of course, contributing to Iowa 29, which is working towards professionalization of the farm organizations. So we'll be working, our initial focus is in the Western Kenya. We have 7 counties, a few cooperatives that we've been working with that we will start off with as pilots are Bungoma Cooperative, which we've worked with in our SIA project in Kenya, and also has had a link with our Starlit that is going on now. Homa Bay County, we have a women circle that we've worked with, and a number of them, but we will also be recruiting others. So in terms of what we are looking at services, we are borrowing a lot from the advancements that are being made in Rwanda. If you look at support to seed certification, we will be borrowing from the lessons that we are learning from the Rwanda maize value chain, where they're doing a lot of this. The fee-based extension services, again, our STARS program, the follow-up program has worked a lot with the young people to be able to deliver fee-based extension services. That's a lesson that we want to import into Kenya, and to be able to see how that can also change the functionality of the farm organizations and hopefully contribute to their productivity. Negotiation of terms and conditions, I think that's a standard practice when we talk about BDS and how we enhance the capacity of farm organizations to be able to earn better from the produce or the engagement that they are in. So I think I'll just sample a few. Most of them are known to us and they're not very new. I only wanted to stress the fact that we're using this as a platform to scale up their AMEA tools. A few of them are listed, but I know once we are at the point of still designing, once we are very clear and particular about the tools that we will use, I know I will be approaching the owners bilaterally to have further discussion. And then the co-intervention 3 is basically looking at our own internal responsibilities as an organization. We are talking about CODE developing a new campus where we are focusing a lot on climate resilience. So we have an ambition of net zero by 2030. And so everything that we are doing, we want to align to the green technology. We are looking at digitalization as a key enabler. And we have, apart from Kenya being highly digitized, coded also through ECO has had very good working relationship with Simbuka, the DG Farm and IPROD. We are making special attention to the for women and youth to access affordable and loans that can support them. And then finally, addressing the challenge of mechanization, where a number of farm organizations are finding it difficult to be able to access machinery for their productivity. So that is also something that we are going to look at in terms of enhancing their capability to be able to produce more and also to earn more and eventually contribute to the livelihood of the farmer. Thank you so much.
Thank you very much, Marceline, for presenting this interesting concept. Yeah, we'll definitely want to hear more about it later. Thank you. So with this, I think we can now move into the interactive break. It's a short session of 3 poll questions. I'm going to launch them now. The first question is for everyone. So please use this question to express your mind. The second and the third one, you'll see they are designed for the PDS providers and partners of PDS providers, for the second question, and the third one just for the financial service providers. So depending on the organization you work for, please choose one of the 2 to answer. Feel free to start answering the questions now. Can you see the questions?
We can, Felipe.
Okay, thanks. Let's give it one more minute and I'll share the results. Yeah, thank you, everyone. I'm going to end the poll now. We had a very good participation, 20 responses. So let me see how to share the results. So the question on do you or the BDS technical assistance service provider you work with know what is required to enable SMEs to become bankable? And I can see that for 20% of you, yes, they know really well, you know really well. For another 40%, yes, but this knowledge could improve. And 35% of you think it's known, it's not enough. And just 5% are not sure. But no one said that this kind of knowledge is not so important for the work we do. Now the questions for BDS providers, I see everyone answered. And also everyone answered for the financial service providers. But I see there's some kind of differences here with the financial service provider answering a little bit more that rarely they see the technical support and BDS being geared towards meeting the requirements that they have. None of the groups answered always. So it seems that there's a lot of work to do still regarding how to gear BDS and technical support towards meeting the requirements of financial service providers. With that, I'd like to ask Mark Blackett, the network director of AMEA, to lead us in the next discussions, which is about integrated ecosystems approach.
Yeah, thanks, Felipe. I mean, listening to the presentations, I mean, you could broadly categorize some of them as being sort of BDS led with financial service providers coming in afterwards, or government led with BDS coming after it. Or maybe in Aceli's case, it's more financial sector led with TA coming in afterwards. And I think from an AMEA perspective, what we'd like to see is a holistic design, something that's ambitious, that aims for systems change, that is really strategic, and that actually brings all of the ecosystem together to hopefully incentivize BDS to be to deliver better. Again, so to enable SME performance to improve, but also for them to become bankable. And judging by the responses to the survey, it's clear that we've got some scope for improvement. So, I mean, what we're doing now is Scope Insights coming back in with Maurice, and I think you'll see elements of what's been presented so far within this aggregate approach. And so this is one example within AMEA of an ambitious attempt to really change the system and bring all the ecosystem players in. Maurice, I'll hand over to you.
Great, thank you so much, Mark. Yes, indeed, Mark, what you were saying is we have already seen a lot of pieces of a puzzle. And what we are trying to do, and this slide shows you at the bottom the organizations who are currently coming together to design this, right? So it's not a finished thing, but it is still in design. What it aims to do is to move away from that project-driven way of working, but more to a systemic approach. So it starts with the end game in mind. So for the first parts, for the first years, this will probably be that access to finance. It needs to be market-led. We will introduce interoperability. So we will base it on standards, on the bankability metrics, but they will play a very important role. And we need to, tie that up with the tools and systems that we have and the best practices of today and improve on them. And I think this is where that feedback loop comes in that Richard was talking about. Also building strong partnerships based on capabilities, who is good at what and who has, and really identify those clear roles so that it can be performance-based and that we can hold partners accountable. How it works, now currently all these partners who are part of this initiative to put this concept is that each has its own role. We're putting together a machine, and each of those little parts of the machine needs to be developed and defined. So Scopicide will define how do you measure, how do you segment, and how do you assess, so that then the next part, the next role, the BDS can do that very well. So how do you take these, graduate these organizations to next levels? IDH is really, really good at value chain development. So their SDM model really already has been tried and tested, but how does it fit into the bigger picture? Also with Oiko Credit FarmFit Fund. So those organizations really know and can help and can facilitate that access to finance. We're not saying that these organizations need to do this, but this is how we will define the concept. What Aggregate will do, it will scope the cooperative landscape, also farm organizations and agri-SMEs, analyze and segment them in a way that you can really use that for further planning. Then there's what we've already heard today in various presentations: assess, graduate, monitor, so that graduation process. Then improve the service delivery value chain performance, so that's IDH's part, and also use that data. It's all data driven. Use the data to link the more advanced cooperatives to finance inputs and markets. So those are the elements of the concept. The first part, this slide you've already seen in my previous presentation, so I won't dwell on it too much, but parts of this have now been developed. Still, as I mentioned, still needs to be developed further, but we are already starting doing this. The levels, I think it is really, really important to understand why it's important to define these levels. You can see the basic, advancing, advanced. Every level needs its own BDS. So the technical consistence that is required at each level is different. And for that, you need different partners. So that's why it's very important to define this, but also define the criteria for these BDS partners that are good at that level. How do you know you have the right BDS partner? So what will happen if we do this over time? If we collaborate and each has their role and each does their role well, then how would that work? For a country, I just took this example of 500 cooperatives because this is really designed to be done at scale. In year one, you have these 500 that are in this sort of pyramid of the market. If we do this well together in a collaborative way, in that graduation, every year, cooperatives will graduate. And so if you do that over time, you will really be able to shape that market and change the shape of it so that you structurally graduate these cooperatives to become more professional. It looks very much, in the first slide, I showed you all these Dutch parties. It looks very much like a Dutch party, but it's not. we might be the ones that initiate this and further develop the concept, but the concept needs to be possible to copy paste for countries, for sectors, and to be tweaked in those sectors, because the local implementation is key. So yeah, we are the designers, so you will, but we can't do this without the local financial institutions, the apex organizations, the private sector, BDS providers, local ones. So I invite everyone to, once this is up and running and we're rolling it out and trying and testing parts of this, please help us further design and learn, because there's still also a lot of learning to do. So what makes this different? We believe that the interoperability makes it different. We all speak the same language. We have the same data, and we use KPIs to see if we're doing things well. Each has a clear role. The overlap, we get rid of the overlap and we fill in the gaps that are there. So each of us have roles to play, and you become really good at that role. Then we have a quality seal. We want to make sure that, like in the school system, we have a qualified BDS providers, qualified people doing all the work. And so that we can also make people accountable, hold people accountable for the results. And of course, this is what Richard said, that continuous learning, we don't have all the answers. So we really need to try and test things, and that's what test things in local programs at scale. So where do we now stand? The steps that we need to be taken, we believe that we need to start with the end in mind, right? So bankability, how do we define this? Is it only level 3 in that the levels that I showed earlier? Is it only level 3 that is bankable? Or can already level 2 be bankable? Or is that then a different kind of financier in that level? So we need to define that. We need to see how that works. Then the interoperability, define the criteria per level and link this to tools. How do we measure each level, and how do we measure bankability? The graduation system needs to, and I think the poll today already showed that. I think that 80% say that it's not particularly geared towards financing and bankability. So let's also see what criteria, what curricula can best be used to achieve that. The value chain development, the service delivery model that IDH has, how can we combine that with the data of the cooperatives and farm organizations to even strengthen that and make that even more powerful? And then, of course, the access to finance, developing that portal, scaling it up, and speaking with the financial institutions and the lenders and financial service providers to know what makes them tick, what do they need to be able to provide the financing that's really necessary. So to wrap up, I think many of these products and services and pieces of the puzzle have been tried and tested in the past, but the combination of it all, that is what needs to be proven, right? The proof of concept of how, when we do this at scale, and if we all speak the same language, do we bring costs down? Do we facilitate finance? Do we actually train the organizations to become bankable? So that proof of concept, that is what we need. But putting all the pieces together, that's step number 1. So that's what I wanted to conclude about aggregation.
Thank you very much, Maurice. With this, we can move into the session where we are going to seek for your feedback. So we want to hear your opinion and questions on about the lessons shared and also the proposed approaches. So we're going to move into 2 breakout groups. I'll create them in just a minute. And we have those 3 questions to guide the discussions. So after we ventured in answering these questions, which probably are very hard to answer, we'll go back into plenary just to hear in the last 5-10 minutes of the breakout groups of the session what has been discussed in each group. So just ask you for 1 minute while I create the groups, and let me, yes, there you go. Please join the group and see you in a bit.
Which room do I go? Oh.
Just assign you to what? And I need to join. Yes. Hello, I was on mute and I was speaking, sorry. Hello, welcome back everyone. I see we only 17 so far, so we're waiting for the other group to join us, which should be in less than 30 seconds now. Yeah, I see they're rejoining us. Welcome back, everyone, and thank you for staying with us until now. I hope that you had 30 minutes of very good discussions as we did in our group. And also that the guiding questions here inspired very interesting discussions in your group. I'd like to ask Mark to come out of mute and report back on their group, and then I'll do the same for our group. Thank you.
Yeah, sure. Thanks, Felipe. Yeah, very good discussion. I think when we reflected on common data and shared data, sometimes we switch between the two. It was almost like we were talking about the same thing, although we know that establishing common data and then finding mechanisms of sharing are different. But overall, the feedback was, this is a good initiative. It will deliver in the long term. We should move forward on this. But there was, I guess, some reflection on this that, maybe in the short term, a lot of financial service partners will not be as interested because they consider agriculture to be a risky sector. They may have liquidity sort of, challenges, which are particularly acute in certain contexts, certain countries. And therefore, when you're coming to them and looking to partner on something like this, they're going to wait until it's further down the line, so before they decide to partner. They'll look for the proof of concept to be developed, and then they may join later on. That's certainly what I sort of took from that. There was also a good discussion about, would data change bankability? Would it actually change the bankability? I think the overall conclusion was yes, it would contribute to an SME becoming bankable. In terms of, it's more transparent, the financial service provider. It was clear from the comments that people thought that it would save origination costs. The 2 or 3 visits that you need to do to an SME, that could be reduced. So you are accelerating bankability, you are saving sort of costs for the FSPs, but there was also a number of other factors in there, of course, isn't there? And the fact that the data is a snapshot, it doesn't tell you about the future. It's also, it's very difficult for data to tell you how much trust there is in the business partnerships within, that are obviously essential to the SME's success. But I think that's where we went on to tailoring BDS, because a lot of BDS is around working not just on governance and management processes. It's all about, certainly in AMEA, I would sort of say, there's a lot of tools there that are about building up agribusiness clusters where trust is developed, and that's what Solidaridad was talking about as well. Other feedback was, interoperability has its costs. We've obviously got to figure out what the costs will be, who's going to bear those costs. It's also about, when we're looking at the data, who is it for and how are they going to use it, say within an FSP? How do you use it at headquarters level? How do you use it at branch level? Are they looking at the data in the same ways? Yeah, I think, yeah, the only probably one more feedback I would say is that, we reflected on, the BDS at the moment is dysfunctional in many ways. The Ethiopia BDS survey, for example, that AMEA commissioned, it showed what we all know is multiple rounds of training, quite often overlapping. There's a lot of saving to be made from the improving the amounts that are currently spent on assessments and the amounts that are currently spent on BDS. So there's efficiencies in the system, just from sort of improving, so like, you know, the value of those assessments and the ability to share the data, and also by significantly improving the way that BDS is delivered. So, but there will come the question there is, how do we demonstrate, you know, the level of those savings? How do we show that in order to encourage others to invest in system building rather than just another round of projects? So yeah, that's where we got to.
No, thank you, Mark. Certainly very interesting discussions in your group. As for our group, we didn't manage to answer the questions as we feared. However, they did guide us into very interesting discussions, especially regarding data, because we ventured into answering how what would take for financial service providers to reduce the cost of origination, right? And the answer was clearly data. So data and parameters, metrics that were like, such as those were presented by our presenters today. That's exactly something that would help. And in that sense, we also heard from some financial service providers that the presentations touched very important pain points for those that are trying to finance agri-SMEs. And that data collected can help the risk in the agri-SMEs that they work with. So data sharing in general will be very critical in that sense, because there's much data out there. So if there is a place where we can gather that data, consolidate it, it will make it much easier for the financial service providers to make decisions and offer suitable solutions to the agri-SMEs. So in that sense, also, there were some very good commendations to the presentations today, especially the one from Cordate, from Marcelina's presentation, because it was the presentation of a holistic approach, especially using that talks a lot about using the right technologies for linking the components that will eventually allow agri-SMEs to develop and reach the finance that they need. So with that said, other elements that we're discussing in our group is that the ecosystems approach. It's very important. There was no doubts about it. But also more soft skills elements such as networking, coaching and mentoring, including the confidence aspect of the farm organizations and agri-SMEs to approach the financial service providers if they have the data to prove that they are ready for finance. So also other elements were the BDS tailoring. So how can we also tailor BDS to more vulnerable and marginalized groups or communities? And also the financial service providers needing to achieve scale to cover the cost of origination. So those are all those elements we discussed, even though they were not really part of the guiding questions. And we even also ventured into answering the following question for the plenary session, which we'll see just next. I don't know if, Maurice, if you want to complement anything I said. If not, I think we can just move forward.
No, I think you covered it very well, Felipe. And I think together with what Mark said, it goes to show that with the feedback from Mark's session, it goes to show that there are so many topics still that require some more digging, some investigation. I was very triggered by would data change bankability? And that's, I think, one of the things, and maybe we can go to the plenary session and open it up for everyone. But one of the things that I would like to also know is, because we would want to try to also change from that collateral kind of thinking. So how can it be more performance-based, and would data help that? So one of the things, and this is the opportunity for us, at least within AMEA, with all the people present here at this current workshop, for the first time we have so many people who are in the activity of providing loans and providing lending. So may I ask you who actively provide lending, what do you need And how can we help the process for you to maybe adopt standards or use data, or and I know that agri is very risky, but what can we do to help you, lower that threshold and make it maybe more easier? I open the floor. Don't be hesitant. Just put up your hand, introduce yourself. Anyone out there? Yes, Victoria, please. Lifesaver.
Hello. Yeah, my name is Victoria, Success for People CEO. And we lend to agribusinesses, smallholder farmers, and women groups. Unfortunately, I missed the presentations, but I think what I would like to say is that financial literacy, digital literacy trainings to the farmers, and also post-harvest trainings will be very useful to us. And then when it comes to the data, I think mostly it's the acreage of the farmers, the size of the farmers, and then the yield per acreage yield. If we have all that we are going to share, it will help us to reduce the cost of lending to the sector. And I think mostly they are perceived as high risk also because of the products that we use to lend to the sector. So some of us have benefited from AGRA input to be able to help us develop products that are suited for that. But I think products count a lot. So if those who see it as high risk, if they can be helped to develop products that are meant for the sector, that will also be very useful. So I think that's my input. Thank you very much.
Victoria, thank you so much for that insight. Julianne.
Okay, thank you, Maris. So for the sake of the other group, so my name is Julianne Wanjiku. I'm the managing director for FCAN Leasing, a company that provides asset finance to SMEs in the agriculture value chain. And what I just wanted to add is probably just to add on to what Victoria mentioned about data sharing. So most of the clients in this sector, as we want to finance them, they may not have the financial information or the financial data. So sharing of data on issues to do with their production, how much the acreage that what Victoria has said, but also on how much they produce, what are the costs, and anything to do, all the information that there is at the production level will enable the financiers finance and be able to look at probably these businesses and be able to finance them. But the other data that probably would also help is, I think there's something we've not mentioned, insurance. I don't know whether that is something that could be considered also. Yeah. And the beauty about having this, and what is exciting for me is that AGRA is handling this, and AGRA has shown a lot of commitment in the agriculture sector, and I think there's evidence. It's not just talk. There's a lot of evidence, especially in the region, and that kind of commitment, I believe, is what you're putting into this project. So I believe that this is something that will work, and we'd be happy to be part of this as FCAN and also as a group, I believe. So about insurance, going back to insurance, is just just information about insurance, maybe bringing in insurance companies also, the ones that are particularly interested in the agriculture sector, especially the production level. And I would mention just one, not for any preference, but because I know that they've worked in this region also, Puma. You know, they'll be able probably to provide some data that will be able also to guide on the risks in particular sectors, and also covering, if you add insurance covers into this into the package, then it becomes even easier and even more appealing to the financiers. Thank you.
Thank you, Judy-Ann, and thank you for that. For that idea. Kwaku, can I ask you to, and can you please introduce yourself?
Oh, yes, please. My name is Kwaku Bechi. I am currently an independent access to finance consultant for Solidaridad West Africa, but I used to work with Isaac with Pan-African Savings and Loans. This question is very important because when we had that smallholder cocoa farmer collaboration with Solidaridad West Africa, we didn't know anything about farming, giving loans to agri businesses and then farmers. But we had the benefit of them de-risking, creating the impression that they have de-risked all the farmers by forming them into these small where the smallholder farmer, village savings and loans associations, and the rest. And because of that, one bigger element that got out of that was the moral hazard or information asymmetry. We got to know them very well through themselves. And then initially, we added insurance. I think the previous speaker mentioned it, but it was just for life and fire and allied perils. There is another one that Solidaridad is currently doing with poultry farmers, in which we've been able to bring in Gesal. You know, I saw Gesal as part of the, where in Ghana, they provide, what do you call it, if you will, guarantees for, agri businesses. So you don't necessarily have to have the collateral per se. And because of that, this smallholder poultry farm is a pilot of about 500 farmers within a 3-year period. And Gesal, we were able to even negotiate the insurance premium because we are bringing them so many farmers at the same time. So I believe that if we are able to, first, let's talk to the financial institutions because all of them are scared. I'm talking about the Ghanaian situation because they don't know much about this. And very few have gone into the agri-lending, got fingers burnt. So all that they need is for them to get the assurance that there is a de-risking element and that the data is going to create an element for them to have, the farmers to have consequences if they don't pay back. And the most important thing is for them also to know that there is an insurance for that. For instance, Gesal was going to charge 5% of the total value of either the loan or the birds. The birds, if you have 500 birds, we value them and then you pay insurance on that. But we're able to negotiate it down to the point where they were willing to accept about 2% because of the numbers that we were giving them. So I think the businesses in Ghana, the financial service providers, all of them want to do business over there, but they themselves also do not have the know-how or the expertise. Many of them don't. So the best way to do that is to give them that assurance. And I think that is going to work because the way the world is going now, everywhere you go is about climate change, green finance, and then agriculture. And then we talk about youth and then women-led, and the other one is disability. So This is the future. So I believe that we have to look at it. Thank you.
Kwaku, thank you so much for these insights. Very interesting and food for thought. And thank you, Dr. Miriam, for the insight on the chat. Thank you. I think it is important to bring in financial institutions. Maybe Raymond, can you, I don't know how much you wanted to tell, but maybe can you keep it within a minute?
Okay, yes. So I wanted to say that we need to continue to engage.
Can you maybe introduce yourself first, please?
Okay, my name is Raymond. I work with ACD Avoca on the market systems and resilience activity, APNOV. So what I wanted to add is that we need to talk more. We need to engage at this level because the presentations were very insightful. So my first request is, can these presentations be shared so that we also learn from it? That would be very helpful. And then, on the way of talking, last week I met Victoria and I learned so much from her and she learned so much from me. And Agra, one thing that is interesting is that, look, the issue of insurance, Agra brought Polar Insurance into the mix, and they're ready to take their premium at the end of the season. So farmers do not have to worry about paying premiums at the beginning. So if you continue to engage, if you continue to talk at different levels, I think the solutions, we all know the solutions in silos. We can bring them together and we can all work collaboratively to get a lot of solutions. But my request is we need the presentation to help us build some systems here in Ghana too.
Thank you, Raymond. And I agree with you that, building bridges between the silos of all these activities, I think that's one of the key elements. Felipe, do you want to?
Yes, thank you.
Take over? Thank you so much.
No, certainly. We will share the presentation and the recording to everyone that has registered. So as you register, you're certainly going to receive it in a few days, perhaps after AGRF. And with that, actually, I want to just bring us to the closing remarks, and I will ask Hadjik to just share your thoughts, and then we can close the session.
Thanks a lot, Felipe, for organizing and putting this all together, because I agree. I think this was a fantastic session because the BDS providers and the financial service providers were brought together, which is not often happening. So I think for me, the big takeaway is that if we design BDS, we need to talk to the financial institutions and vice versa. The financial institutions, if they want to deal with agriculture, let them talk to the people who want to support agriculture SMEs and co-ops to become better and to get access to their institutions. So I think we should now maybe have an appetite to proactively reach out to each other and find each other. And I think we have seen quite some tools like ACAT, like Scope, like AgriGrade, which can help us talk to each other in the same type of language, same type of metrics. So I hope this was the start of many more conversations. I already wanted to say to my colleague here, Herman, like, oh, wow, all these people in Ghana, do you know all them? And are they talking to each other? I think they do. So thanks, Herman. But yeah, I think that can happen a lot more. And you can always use AGRA and AMEA to make you to know who is out there, right? I think both AGRA and AMEA, and I imagine Scope, we all have a lot of network in this area. So if you look for people and want to know who's doing what, please use us. That's why we are existing. And then thanks a lot for all the attention for the organizations. And yeah, thanks AMEA for organizing this, and have a lovely evening, everybody.
Thank you, Hadjik. Excellent. Yes, thank you everyone for your time.
Yeah.
Thank you.
See you next week for sure. Bye everyone.
Bye.